As the graphics show, every couple of hundred years there's been a change in the world currency, dating all the way back to the denarius of ancient Rome. As talks about an economic collapse are heating up among economic experts, some believe that it might even trigger a global currency reset. In 1944, the Allied countries came together to establish a new global monetary system. Called the Bretton Woods Agreement, they decided to ditch the gold standard and use the US dollar as the global currency. The agreement also created the IMF and World Bank, two institutions tasked to monitor the new system. The nations had agreed on a fixed currency rate almost similar to the global gold standard. The US benefited greatly from this new currency system, and the dollar made its way into central banks around the world. In time, we left the fixed rate system.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
President Richard Nixon stopped backing US dollars with gold globally in 1971. This was known as the Nixon shock. Since then, the dollar and all other currencies in the world exist without any support from a hard asset like gold. The system led to a situation where the world ended up with more debt than assets. After the 2008 financial crisis, experts started predicting that the current financial system was on its last legs. This is when the concept of global currency reset strengthened. Basically, global currency reset refers to a process where the US dollar will eventually lose its place as the global currency. Instead, gold or some other instrument will be used as the new standard. The day is approaching when people are going to wake up en masse with the inevitable economic collapse of the financial world. Those accustomed to living off government spending are either directly or indirectly going to be in trouble, resulting from the fact that, unfortunately, a good number of the more than 7 billion human beings on the planet will feel pain or even suffer death. The world debt is documented in bonds, which are contracts that promise payment of a debt. With regard to the wealthy that hold large quantities of bonds, when the crash arrives, their bonds will become worthless pieces of paper. And that is the nasty surprise that is coming for the wealthy. Currencies of all nations will revalue based on the value of their assets. This is expected to cause a sharp rise in gold prices as people seek out the financial stability provided by the yellow metal. However, the absolute deadlines for Federal Reserve have been surpassed. They didn't come up with quadrillions in gold for debt repayment to keep their fiat global monetary system afloat. This implicates their complete loss of control over the United States and the global monetary system. The U.S. Federal Reserve is mostly owned by European banking empires. It is not a federal American public institution, and it does not store America's gold reserves. America's citizens owe trillions of dollars to this secretive entity that was quietly established 2 days before Christmas in 1913. Since the Federal Reserve was created in 1913, the dollar has lost 95% of its value. Its worth eroded by inflation. The U.S. debt currently sits at over $22 trillion and grows daily. In 2011, Standard & Poor's, a ratings agency, downgraded U.S. sovereign debt from AAA to lowly A. Sooner or later, government spending has to be paid for. Sooner if by your children, later if by your grandchildren. The 2008-2009 financial crisis, which started in the U.S. through the subprime mortgage debacle, was another flag to the rest of the world, signaling a move away from the dollar toward other currencies. The quantitative easing, QE programs that saw the Fed's assets skyrocket from $900 billion to $4.5 trillion between 2019 and 2015 through the buying up of mortgage-backed securities and U.S. Treasuries paid for by printing money, made it inexpensive for the U.S. government to continue to borrow and spend with rates close to zero. However, 3 rounds of QE showed other countries that the United States was no longer following a sound fiscal policy. All they were doing was printing money. Countries started to diversify their foreign exchange reserves and reduce their dependence on the dollar. According to the IMF, USD foreign exchange reserves fell to 61.63% in the second quarter of 2019, the lowest they've been for 6 years. The euro, yen, and yuan all increased their share from the previous quarter. In the first quarter of 2019, global debt hit $246.5 trillion. Encouraged by lower interest rates, governments went on a borrowing binge as they ramped up spending, adding $3 trillion to world debt in quarter one alone. It reverses a trend that started in the beginning of 2018 of reducing debt burdens when global debt reached its highest on record, $248 trillion. The first quarter spending spree brought the debt pile to 318% of global GDP, the first quarterly increase in 2 years, according to the Institute of International Finance, amid record levels of corporate and household debt in many mature markets, CNBC reported. Finland, Canada, and Japan saw the largest increase in debt to GDP ratios of all the countries tracked by IIF in a one-year period. The IIF study is alarming because high levels of debt put countries in a vulnerable position in the event of a downturn and could endanger the world's economic recovery, Axios reported in July. According to the World Bank, countries whose debt to GDP ratios are above 77% for long periods experience significant slowdowns in economic growth. Every percentage point above 77% knocks 1.7% off GDP, according to the study via Investopedia. The United States' current debt to GDP ratio is 106.5%. In other words, the country is accumulating about the same amount of debt, currently $22 trillion, as its annual economic output. Each year, another $1 trillion gets added to the national debt. Rising interest rates compound the problem. In 2008, interest on the national debt was $253 billion and consumed 8.5% of the federal budget. By 2026, the interest is projected to be $762 billion and take up 12.9% of the budget. This is approaching the U.S. military's current budget of $989 billion, which is the second largest line item in the budget, behind only Social Security. According to its latest projections, the Congressional Budget Office says debt to GDP will reach 150% by 2047, well past the point where financial crisis typically occurs. The budget deficit is also likely to rise, nearly tripling from 2.9% of GDP to 9.8% in 2047. This can't go on forever. It's not a stretch to envision a scenario whereby the world's reserve currency, the US dollar, collapses under the weight of unmanageable debt triggered, say, by mass offloading of U.S. treasuries by foreign countries that currently own about $6 trillion of U.S. debt. This would cause the dollar to crash, and interest rates would go through the roof, choking consumer and business borrowing. Import prices would skyrocket too, the result of a low dollar hitting consumers in the pocketbook for everything not made in the USA. Business confidence would plummet, mass layoffs would occur, growth would stop, and the U.S. would enter a recession with economic collapse. All the countries that sold their treasuries would then face a major slump in demand for their products from American consumers, their largest market. Eventually, companies in these countries would begin to suffer, plus all other nations that trade with the U.S., like Canada and Mexico. Before long, the recession in the U.S. would spread like a cancer to the rest of the world. Last week, a central bank said gold could serve as a trust anchor for a renewed international monetary system in the event of a global reset. In an article on its website, the De Nederlandse Bank boldly claims, if things go wrong, prices may fall. But crisis or not, a gold bar always holds its value. This, of course, is a likely scenario to gold enthusiasts who invest and believe in gold for its utility as a store of value when everything else, i.e. fiat currencies, fails. But it was unusual to hear it from a central bank. We know central banks have been hoarding gold bars for going on 2 years now, in 2018 reaching an accumulation last seen in 1971. What we didn't know was what they planned to do with it. In the article, the Dutch National Bank gives us an intriguing clue. Gold is the trust anchor for the financial system. If the whole system collapses, the gold stock provides a collateral to start over. Gold gives confidence in the power of the central bank's balance sheet. Indeed, holders of dollars would find their once powerful greenback reduced to monopoly money. People with gold would be the only ones left with any purchasing power to pay bills and buy day-to-day goods and services. The Dutch central bank's comments about gold playing a key role in the event of an economic collapse begs a couple of questions. First, what is the reset that catalyzes the collapse of the financial system? Second, what are the consequences of this reset? At Ahead of the Herd, we think the Dutch bank is talking about an unsustainable level of spending and debt. That is the catalyst for diminishing the US dollar and ending its reign as the world's reserve currency. Gold then takes over as a backstop to the new world currency. The gist of Carney's argument is that the dollar's reserve status is conferred on it a status that it no longer deserves. While emerging market economies have become more important to the world economy, contributing 60% to global activity versus 45% before the financial crisis, their currencies have not yet seen a corresponding increase in importance vis-a-vis the dollar. The best example is the Chinese yuan. Also, the dollar's use in half of the international trade transactions is out of proportion to its share of world imports, 5 times more in transactions than imports, which fuels demand for U.S. assets and exposes many countries that hold U.S. treasuries to damaging spillovers from swings in the U.S. economy. Weakening the dollar is the last throw of the dice in rescuing the global economy, according to Saxo Bank's Steen Jacobson. In the online trading and investment specialist outlook report for the fourth quarter, published Thursday, Jacobson said 2019 will most likely be remembered as the year that kick-started a global recession, despite the lowest ever nominal and real interest rates. Monetary policy has reached the end of a very long road and has proven a failure, Jacobson, who is the chief economist and CIO at Saxo Bank, added. Fears for the global economy have been exacerbated of late by the weakest manufacturing data out of the U.S. for over a decade, which compounded already fragile readings from across the Eurozone and beyond. In a global system of failed monetary policies and a long and difficult path to fiscal policy, there is only one other tool left in the box for the global economy, and that is lower the price of global money itself, the U.S. dollar, Jacobson said. This is the closest any sitting U.S. president has come to publicly declaring bankruptcy. Other Trump statements and actions all point to some existential financial crisis. However, it's almost as though Trump is out to destroy capitalism. While that may sound crazy, he's doing all the things that capitalism's ultimate foe said would result in its downfall. As Vladimir Lenin once said, the best way to destroy the capitalist system is to debauch the currency, subject it to unsustainable levels of government debt, then increase the money supply such that the value of the currency drops sharply. If President Trump wants to be reelected, there is no other way out than to make gold money again. Most people don't realize that they need to own gold. Gold is severely undervalued relative to where it should be because too many people have too much confidence in central banks and fiat money. They don't realize they need to own gold. We're not sure when the global reset will happen, but what will be the trigger, i.e. a corporate debt time bomb that could crash the global economy? Almost $19 trillion of debt is owed by companies that don't earn enough to cover the interest payments. We are absolutely sure the reset will happen and gold will play a very important role in the transition to a new world currency. The day is approaching with inevitable economic collapse and stock market crash. Do your part by sharing this video with everyone you know who you feel may be concerned about our freedoms and a sound future for their children and grandchildren.
The financial and political opinions expressed in this video are not necessarily of Financial Argument or its staff. Opinions expressed in this video do not constitute personalized investment advice and should not be relied on for making investment decisions.